Hello, guys. This is Ty, aka the Flipman, and today we have the direct mail expert of experts, especially when it comes to real estate investors. We have a man, Jeff, here at Graphic Connections. I know you by different names. Will that work? Or
Well, Graphic Connections is, thanks, Ty, by the way. My name is Jeff Charlton's last name, and the company name is officially Graphic Connections Group, but we operate in the real estate space with direct mail under REIPrintMail.com. So that's not actually a company, that's just a brand name. Graphic Connections Group is the name of the company.
Okay, cool. All right. So just to get right into it, Jeff, obviously most of the content here I have on my channel is about wholesaling real estate or just real estate investing in general. And the name of the game is generating leads, which allows you to get to potential motivated sellers. If you're not doing an effective job of generating leads, it's very, very difficult to do deals consistently. And so direct mail is one of the main methods used to find motivated sellers, mainly with houses and land. And so before we get into that, if you'll just get into a little background about yourself, Jeff, and your company, and we'll go from there. We'll build from there.
Sure. We're a printing company. I started in the business 40 years ago as a general commercial printer, and I actually started this company 33 years ago. So I worked for somebody else for a while to learn the business. I'm actually an engineer by training, but I sort of ended up in printing.
Really?
It's a long story, but
I didn't know that. Okay. All right.
Yeah. Anyway, about 15. So we did general commercial printing for a long time, which is printing is basically any piece of paper or shirt, like there's embroidery on the shirt or a sign. Anything you see that's got graphics on it, that's printing. And so I did that for years. And about 15 years ago, I've always been a real estate investor, personally, going back to when I was 18 years old. Never been an active house flipper. I've always been just for passive investment, rent and hold, rental properties type thing. I've never had a huge portfolio, but I always had a handful of properties. And I met some guys in doing that over the years. I met some guys that are influential in the industry. And long story short, there was a company in Memphis Invest working out of Memphis that had rental properties over the years. I was doing all the work myself, and that's a pain in the butt. And I didn't want to do that anymore. Well, they had a turnkey program where they did everything. They rented it, collected, managed it, did the repairs, everything. So I bought a bunch of properties from them, and it was hands off, and it was great. Well, they had a family that were heavily influential in the real estate business. And through them, I realized there's an opportunity to help other investors find properties to buy. And I helped them. So I got into it. I helped them find properties to buy for their business through direct mail, and it worked pretty well. And so then I thought I could do this for other people. So we started about 15 years ago, before 2008 crash. I guess that's 17 years ago now, whatever that is, long time, doing direct mail for real estate investors. And about 5 years ago, we really, really focused on it. And we just have taken off like a rocket. And we now, today, I print and mail about 3.5 million pieces of mail every single month, specifically for real estate investors nationwide. And we're growing like crazy. I've got 100 employees now. We did $31 million in direct mail sales last year, and we're probably going to do 40 this year. And there's no end in sight. So our biggest claim to fame has been being an engineer that I am. I've always been very technical, and I like to really know what I'm talking about. So I've become an expert in everything there is to know about printing and direct mail and marketing for that matter. I'm really good at designing new mail pieces that are unique and that work. And also through data, we have a data company now as well. So we not only print and mail, we also can get you data. We've gotten really good at finding ways to identify those houses most likely to sell with our data. And since AI's come around the last few years, we've embraced AI like a lot of people have, and we're using that to make our list even better. So add it all up, we're very good at helping investors to mail and mail effectively so they can actually generate leads that actually do turn into deals that are profitable. So it is a numbers game. Like anything, it's still a numbers game. It's still marketing. But we use our expertise and our experience. The key thing is because we're mailing so much, we've got a lot of aspects to our company. One of the aspects is we track results. We answer the calls for some of our customers, so we know every single call that comes in. I know exactly what a direct mail campaign produced in terms of leads and how good the leads were. And so we use that to advise other people of what's working and what's not working. We also use that as a testing ground to test new mail pieces, test new lists. And so we test things before we really roll them out. to everybody and make sure it's at least reasonably working before I even roll it out. And that gives us a leg up on most of our competitors. We can generally get better results for our customers than our competitors.
I was trying to remember when you all invited me out to St. Louis, that's where you all are based. Was that in 2018? I know it was before COVID. I always register everything before COVID, after COVID.
Well, it was 2018. I can't believe it's that long ago. It seems like it wasn't that long ago.
Yeah, it was before COVID, but I want to say around 2018.
We're a lot bigger then. So if our operation's twice the size of what you saw when you were here.
You're still in the same facility you were in then?
Yeah,
or
took over the whole building now.
Okay, the whole building now, because it was in like a little office plex type deal.
Yeah, it's a building, 24,000 square feet. We had, I think at that time we had about 18,000 of the 24,000. So we've since taken over the whole thing. And I just bought another building across the street we're expanding into. So
yeah, I remember in part of the building you had there, I don't know if you're still doing it, you were doing some Amazon stuff also at that time.
Yeah, we got out of that finally. So.
Okay.
I wasn't making any money in Amazon, so
you should be the warehouse portion.
Yeah, by the way, if you're thinking about going into Amazon as a reseller, don't do it. That's my advice. So, it is not profitable.
All right. Okay, so let's get straight to it though. So you all handle so many customers that are real estate investors trying to generate leads. But before I ask that question, what would you say the ratio is to property types that are being targeted? Houses, land, any commercial being targeted? What's your ratio right
I would say for us, very little commercial, maybe 2% commercial. It's probably 90% houses, built houses, 10% land.
Okay.
It's like 8%. We do have a couple of large land coaches that do business with us exclusively, and they do a fair amount, but the numbers they mail are pretty small. Compared to people trying to buy houses, it's still pretty small.
Okay.
It's growing. Land is growing, I'll tell you that.
Oh yeah, most definitely.
Yeah.
All right, so what's the perfect setup for someone? We'll get into cost and all that later, but what's the perfect setup? Because I can just tell you what my challenge has been over the years, and it sounds like you all actually have that answered now, is when someone calls back, they're being ready to take the call because they responded to your piece of mail that they received or whatever. So what's the ideal setup for someone to succeed with direct mail right now?
When you say being ready, you mean you may not be able to answer the phone. Funny you should ask that, because this is big too. And I just discovered this fairly recently in the last 6 months. And let me explain what I'm talking about. We have a business called REI Complete, which is we do the mail, and we have a call team in the Philippines that actually answers the incoming calls. And we live answer. And if they answer the phone, we actually ask them a series of about 10 questions, find out if they really have a house and they're really interested in talking to somebody. We call that a qualified lead. If they really have a house, they're really interested in talking to somebody, it's a qualified lead. And then we enter all that into a CRM that we provide as part of the service. And then we forward that to the client. If the client already has their own CRM, we link to their CRM. So either way, they get the information. So they only have to talk to the qualified leads, the people that are really interested. Because when you do any kind of marketing, you get a whole bunch of phone calls of people saying, take me off the list. I hate your guts. I'm going to sue you. You get all that kind of stuff. Okay. And we wade through all that crap, and you don't have to worry about that. We only handle people that actually want to talk to you. But the point I was trying to make, what I just discovered, we started doing live answer for years. I bought this company, this aspect of the company, about 3 years ago, the phone part of it. And they never answered live. Well, we started answering live about a year ago because I knew that was important. And we kept statistics like I talked about. Well, we were about 6 months ago, I was looking over the statistics and I stumbled across, we also keep statistics on people that do business with us, but answer their own phones, as long as they use one of our tracking phone numbers. Well, I noticed that people that are answering their own phones were really doing a bad job answering the phone, like low percentage. And I averaged it all out. It turned out over millions of pieces of mail, the average answer rate for people that answer their own phones was only 45%, meaning 55% of the time the call came in, they didn't answer it, okay? And they missed it. And that's across the board. And some people were as low as like 10%. It was terrible. I saw that, a light bulb went off in my head and thought, man, there's gold there. People are missing out on this thing. They need us bad. Because then I looked at when we answer the phone, we answer it 78% of the time. And of the ones we miss, if they leave a voicemail, we listen to the voicemail right away and we transcribe it, put it in your CRM. If they don't leave a voicemail and they just hang up, we still capture the phone number. And in both cases, we call them back relentlessly until they finally talk to us. And we end up talking to 100, almost, not quite 100%, but almost 100% of the people we end up talking to. Well, that is massive. So,
just real quick, with your service, you say 7-8%, which is high, very high. What is the bottleneck on that 22%? Just hours?
It's either we answer the phone 6 days a week, 14 hours a day. Okay. They either call after that time period or they hang up before we answer it.
Okay.
Or whatever. Things happen. Sometimes calls get disconnected, whatever.
7-8% still really high.
We never don't answer. We have enough people that if it rings when we're there, we answer. Okay. But the point I'm trying to make is people don't know that. And so I took that information to some of my larger customers that were doing big companies that they're flipping a lot of houses. They had a team, they had everything. And I said, what do you think about this stat? You believe that if I said you only answer the phone 45% of the time, what do you think about that? Every one of them said, oh, I believe it. Yeah, I believe it. I said, I'll tell you what, give us a chance. So long story short, we did it for free for a few months for several of these big people just to see how our answer compared to their own answering. And 100% of them are still with us now and they're paying for it because they said, this is awesome. We had no idea we were missing out as much as we're missing out. If you think about it, what happens with real estate investors, and you can speak for yourself, you're busy, okay? You're working. A lot of people are small operators. It might be a one-man show, might be just a couple people. You're working your butt off all day long. You're on your phone half the time. If somebody calls in and you're working, you're probably not answering the phone. If they leave a voicemail, you still got to go listen to the voicemail. You got to call them back. They're not going to answer the first time most of the time. You got to call people. In fact, we know this too. It takes on average 10 return phone calls before you finally get a hold of somebody. So are you going to try 10 times? Probably not. So the reality is those leads just get lost. So you pay big money to generate leads and you throw half of them in the trash just because you don't answer the phone. Well, that flat out is dumb. So all you got to do is let us answer the phone. It's not expensive. We have programs that range between $500 and $2,000, depending on what you need and the various different things. I'm not going to get into that, but the worst case is $2,000 a month. And I guarantee you, if you recapture 50% of your leads, you're going to easily pay for that $2,000 a month, plus a lot more than that, because you're going to get a lot more deals. And we've got the facts to back that up now. We've been doing this now for about 6 months where we're tracking it better and we're selling it like crazy, and people, they're loving it because they didn't realize how much they were missing out on. So that's a huge deal. So you asked me the question, what's the best setup? Well, the best setup is you got to be able to answer the phone, first of all. And I understand when you first get started, especially if you're by yourself, you may not have a lot of money. You try to cut corners. I get that. But the most important thing is when a call comes in, you better answer the damn phone. And if you miss it, try to call them back as quick as you possibly can. Because the quicker you try to call them back, the better chance you got of them answering the phone. If you wait a day, they might think it's a spam call coming in or something, and there's a good chance they won't answer it. So that's the single most important thing. And then you got to know, secondary to that, handling the call in a way that is proper is very important. That's not our expertise. We're not helping people convert. We're just helping people generate leads. I can give you some tips. I know how to do it, but bottom line, you got to talk to people. You got to be friendly. You got to answer the phone. You got to get to the point. You got to wade through the people that are wasting your time, get rid of them as quick as you can so you can focus on the people that are the serious leads. But still, you never know. The problem is, no matter what kind of marketing you do, you're going to get calls from people that are going to waste your time. You're going to get calls from people that are going to threaten you and take me off the list. There's all kinds of crazy people out there that got nothing better to do but to call you and hassle you. So you got to get a thick skin. You don't let that worry about it. Bottom line is, if they're not actually interested in selling their house, they are not a good lead. And let them be nice to them. Don't be a jerk. Hey, thank you very much. Appreciate the information. We'll take you off the list. Have a nice day. Go to the next one and don't lose any sleep over that. There are people that will come to us and they will complain. They might say, well, I got all these crappy calls. Your mail sucks. No, there's no way you can avoid getting crappy calls no matter what kind of marketing you do. There's no way. And the more general it is, like people that put out signs or billboards, those are even worse because you get all kinds of crazy people from those. At least with direct mail, you can target people through the mailing list. You can target people that, you know, are in the price range you're looking for. They have enough equity you're looking for. Maybe if you're looking for an age group, most houses that get flipped are flipped by people. I mean, that the people that own the house tend to be older people that are either getting ready to move into a nursing home. Maybe they died. or they're just getting old, they can't take care of the house. Those are your demographic. And so you got to know how to talk to those kind of people.
As far as talking about the demographics, man, it's all over the board. And you got a lot of data, so I like numbers. So from what you've seen, who are the best target? Just right now. I know it could change.
Well, I mean, the most basic list that everybody buys is an absentee out-of-state owner with high equity. Those are the 3 or 4 factors that the most common mailing list that anybody buys. And what do I mean by that? Well, high equity, you understand if you have high equity, it means there's not much debt left on that property. And we all know as a real estate investor, we're going to buy it wholesale. We need to buy the property for way below the market value. Mm-hmm. So somebody's got to have enough equity so they're not having to go into their pocket and pay off the house when you offer it. I mean, you can still do deals like that, but that's a much more complex deal, and you get into short sales and all kinds of crazy stuff. I mean, there are people that do that successfully, but they're experienced, and that's way more complicated. Also takes a lot longer. For most investors, especially beginners, finding people that have high equity, that they can just take less money and they're still good, that's what you want. So high equity, and how much equity depends on where you're targeting. That's really up to you. But then absentee means you don't live in the house. So if you don't live in the house, there's a pretty good chance you're renting that property. Well, if you've ever rented properties, and I can speak from personal experience because I've rented a lot of properties, they're a pain in the ass in a lot of cases. And what happens a lot is landlords get sick of their property and they want to dump it. Well, they know the game. So if you call a landlord who maybe his house is vacant, and it's been vacant for a few months, and he's just sick of dealing with it, and so he's an absentee, and if he's an out-of-state absentee, that's even better because it's hard to manage a property out of state. I did it in Memphis, but that's only because they had a turnkey program. They didn't have turnkey, and I was trying to do it myself. That'd have been a nightmare. So that's a good target because there's a chance at any given time, there's a decent percentage of those people that would take an offer to get rid of their property. And I did it, I can tell you that. I've been in and out of real estate in my career several times. What happens is I'll do it for a while, I get sick of screwing with it. And based on market conditions, I did it right before 2008. I had 4 properties in St. Louis, 4 2-family flats. I was managing them. I was sick of it. They had gone up in value to a crazy level that I thought was more than it was worth. And I had somebody send me a direct mail piece. We're talking 15 years ago. And I said, you know what? I'm going to sell this sucker to that dude. And he bought all 4 of them. Bought it for less, but I still got more than I thought it was worth. I was totally happy. And I washed my hands of it. And it was great. Okay. And even though I'm in the direct mail business, I responded to somebody else's direct mail piece that was soliciting me. So, it happened. And then 2 years later, I wanted to get back in, got antsy, but I found a turnkey deal. So that's what happens to people. Anybody who owns real estate has good properties and bad properties. And a lot of times you want to get rid of the bad properties. So high equity, absentee, out-of-state owners is the ideal list. Then you get into other things like probate. That's one you hear about a lot. Probate's when somebody dies and it has to actually go to court. And not every death goes to court. So you got 2 types of death things. You got inheritance leads, you got probate leads. Inheritance is they didn't go to court, but somebody still died and there's still an inheritance. Well, why is that good? Well, it's good because, and I can speak to this too, my mom just died about a year ago. She had a house. We didn't want the house. So me and my 2 brothers, we sold the house, and we actually had, just so happened by chance, the house very next door to her had been bought by a house flipper, and they were fixing it up at the time she died. That same person came to us and offered us, at the time, I thought a number that was too low. Her house wasn't that bad. So I said no to that deal. We ended up fixing it up ourselves, did a minor fix up, went through the total hassle to fix it up, took about 6 months. We didn't get what I thought we'd get retail. In the end, her house was worth, I thought I was going to get $600,000 for it after it was fixed up. I only got $450. And after real estate commissions and everything, I got $425. The guy had offered me $400 to take it as is.
Wow.
And I kicked myself after that. Had I known all that, I'd have taken that $400 in a heartbeat. Mm-hmm. But I didn't. So yeah, I think I got off track. Oh, my point is that was an inheritance. Okay. Yeah. We didn't go to probate, but my mom had died. And so we can get lists of people like that, and you mail those people. And probate's the same thing, except that when it's in court. And when something's in probate, that takes a lot longer. It takes as much as a year to go through probate. So it's harder to, just takes longer to work those deals. But there's a high probability when somebody dies, there's going to be a house that's available. And usually it's from somebody that's been living there a long time, usually has a lot of equity, and usually it's not fixed up. So it's a prime candidate for a house flipper.
I may be putting you on the spot here, but you may have them right at your fingertips. Some of the best pieces that are working right now. I know you all worked together and did a thing on the check. I called them bandit checks. It was the letter where you're sending out basically making an offer. It's a check and it shows what you're willing to pay for the property. So it's little back end stuff that you have to do to come up with a bag and then what your offer will be. But what are some of the best pieces that are working right now?
Well, that one still works. Offer, in fact, we're the people in the whole industry that invented this whole concept and everybody copied it. So I wish I even copyrighted it. Unfortunately, it's hard to enforce copyrights, but that still is the most popular thing. There's all kinds of different versions of it. Basically, we call it soft offer. You put a number on the mailer, but it's not really the offer. It's a starting point. It generates a phone call. We also have postcards and things. We have all kinds of versions of soft offers. So I will say the top two performing things right now are soft offer checks. And again, any kind of version doesn't really matter. We have a pressure seal one. That's the one you're talking about. That banditchecks.com that's being advertised here. We do that for Ty. And that is the one that still is performing well. It's a pressure seal check. So it looks like a government check. So it definitely gets open. People pay attention to it. The whole secret in direct mail is to get the person's attention long enough so they'll actually pay attention to your offer. That's true in all marketing. All marketing boils down to one simple thing. You have to be in front of somebody often enough so when it's time for them to buy what it is you're selling, they think of you first. That's marketing 101. I don't care how you advertise.
That's it.
Real estate business, we're not selling anything, we're buying, but it's the same concept. So in mail, it's the same thing. Somebody goes to their mailbox and they got a pile of mail. The first thing you got to do is get their attention in that pile of mail. Are they going to actually look at the mail piece? Because a lot of people flip through the mail over the trash can. Well, you got to make it past the trash can. So you got to have something that initially gets their attention. Well, something that looks like a check is something they're not throwing away. Okay. That's going to make it past the trash can. Or something on a postcard. If they've got a property to sell, they might be interested and they can see a postcard that says, I'll pay you $100,000 for that property. That's a good chance of making it past the trash can. Then the next step is to get them to actually read the mailer. But, so we try to do things that get their attention. And in the real estate space, we have found over the years that things that are handwritten, it seems like almost the crappier it looks, the better it works, which is really weird. That is not true in other industries, but it is true in real estate. And I think, and this is only a theory, I don't know this absolutely, I'm not sure how you would know it, but I think it's because a lot of the demographic is old people, and old people tend to read everything they get in the mail. And if it looks like you wrote them a note, they're going to read it, okay? And a lot of times they think you really did read them a note because technology we have today, even though it's all electronically generated, it looks really real. It looks like somebody wrote you a personal note because that's what we do. That's what we're good at, is making things look personal. So that's another key factor, is making it look personal. Almost everything we do, there's two different basic types of direct mail. There's stuff that looks personal, like it's something specifically for you, or there's something that's obviously marketing material. Everybody gets in their mailbox. Bed Bath & Beyond is a big company they're always sending postcards with coupons. But you see remodeling companies, all kinds of mail where it's high gloss postcards and brochures and things. That's obviously marketing, and people know what it is. It never has worked very well in real estate. I've never had any luck with things that are obvious marketing, glossy stuff. More luck with things that are not glossy, look like they're personal. So that's what we tend to go towards.
Wow. I know years ago you did the photo on the postcards. You think that's overkill now, or?
That never hit any home runs. I was the first guy that invented that too. We call it AccuPix. I originally got the trademark Street View mailers, ended up getting in a dispute with Google, who owns the word Street View. And I ended up having to sell my trademark to Google early on. But I always thought that was going to be a massive home run. It never was that much of a home run. It worked okay. It wasn't a failure, but it wasn't like, wow, this is the bomb.
Well, what you thought it would be. Like,
yeah, but it's still, we have that. We still use it.
Yeah.
I'd say 10% of the mail we send out has the pictures of the house. Now, that's very personal. I will say that. That does check the box of personalization because it's their house. But a lot of people have copied that. The thing now is, and it's always been the case, as a real estate investor, and this is a key point you got to understand, there's only so many deals to be had in any given market. I mean, it's a finite number.
Mhm.
And you don't control that. That's just what's available. But the more people that are trying to get those deals, the more competition you have, the more the pie gets split up into more pieces. And this happened before 2008 too. There was a huge ramp up of real estate investors going up and up and up and up and up right until the 2008 crash. And then 90% of them dropped out. They all went belly up and we went back to a more reasonable number. Well, ever since 2008, we've seen the same thing. We're still adding more real estate investors to the market every day. And there's guys like Ty all over the place teaching people how to flip houses. I mean, every city in America has probably 20 guys like Ty at least teaching people how to flip houses. And there's a lot of people getting into it. So there's more competition. So we're seeing response rates for all marketing continue to go down. It's not because it's not working anymore, because there's more people competing. It's that simple. And that's why the thing I told you, everybody's copying me, my mailers. A lot of people are mailing the same mailers. So we try to continually come up with new things. I just designed 2 brand new ones yesterday that we're really excited about because we've got some initial, well, we haven't tested them yet. We're putting them up. We've got some initial feedback from people that we respect their opinion that we think this is going to be the next thing that's going to work really well. And it's still an offer type of mailer, but it's something totally different just to stand out in the mail. Because if you're getting 5 mail pieces in the mail, they're all the same, you know, and you get one that's totally different, maybe you pay more attention to one that's totally different.
I remember I was at a closing, it's been a minute, and it was from a direct mail piece. And the lady told me that the reason that I was talking about the photo, the reason she called me over everybody else, because she gets tons of them, is because it had the photo on it, right? You know, of the house.
Right.
So I think that's when, like you say, you were ahead of everybody else.
Another thing that works, talk about photos, a photo of you and your family, especially if you got a family and some nice kids and everything. You put a picture of your family on a mailer, and that tends to add to the response rate. Because I think it's, again, gets back to these old people.
Mm-hmm.
They can see what you look like, and they think you look like a nice guy or nice gal. I think that helps them call you. It helps them remember you. And this is another key principle in direct mail. You got to touch them more than once, okay? Multi-touch, multi-different mailers. That's the 2 things, because the 2 things is you never know what somebody's going to respond to. Different people respond to different things.
Yeah.
And so we do a campaign for somebody. We always recommend you hit the same person at least 3 times, often a lot more than that. We have people mail in every month to the same people. And they just hit them indefinitely because, especially if they're in small markets and they have a finite list, there's only so many people that fit their demographic.
Right.
So they can't keep getting more lists. So they got to keep hitting the same people over and over again. Because you never know what they're going to respond to, and you don't know when they're ready. Just because you hit somebody, that's another concept people don't get. Just because I mail you something, and even if it gets your attention, and I say I want to buy your house, doesn't mean you're ready to sell your house. Okay.
I have another story on that.
Yeah, but you might be ready to sell it 6 months from now. Okay.
I had a lady, she held on to a piece, and it was 1.5 years. And she lived I'm here in Birmingham, that's where the property was, and she lived in the state of Washington.
Right.
She knew she was going to sell the house. She just wasn't ready. She held on to that postcard for 1.5 years.
And that's the thing about direct mail over all their marketing. In the world today, you got, in the real estate space, I mean, you got just 3 or 4 types of paid marketing. Now, you can always go out and do legwork. You can drive for dollars. You can put signs up. That's what I call sweat equity marketing. I'm not talking about that. Okay. I'm talking about when you're ready to pay somebody to do some marketing. Like if I'm going to do mail for you, you're going to pay me to do it. Okay. Well, you can pay me, or somebody else does mail. You can pay to do cold calling, cold texting. You can do pay-per-click advertising, which is Facebook or Google, Instagram, or any of those things, or social media. Pay-per-click is when I don't know if everybody understands it. If you go to Google and do a search, well, you don't pay for anything. The guy paying for that ad doesn't pay for anything until you click on his ad. You click on his ad, then he pays a fee for you to click on his ad. That's called pay-per-click. Facebook works the same way. Then you've got pay-per-lead, which is pay-per-lead is instead of paying for the ad, you're paying somebody else to put all the ads out, and then they generate the lead, and then you buy the lead from them. And those are way more expensive. Sometimes they're as much as $1,000 a lead. But that's really it. So you got about 4 or 5 different, you got billboard advertising, radio and TV. Billboard advertising, radio and TV are really only for the really big guys. And even that doesn't always work.
Oh, I've done that also. At the time I was doing it, well, I don't know if I'm a big guy, but I was doing it and it just didn't produce the results, and it's very expensive.
So much crap when you do that, and it's expensive.
Oh, yeah,
you got to blade through so much crap. You got to have a whole operation just to wade through the crap. That's a problem.
Yeah.
So anyway, the point is, that's really it. And I forgot what I was making a point. There's another point here, though. Different people respond to different things. So this is another key factor.
Not to interrupt you, Jeff, you may not remember telling me this, but when you and I were just sitting in the conference room, you told me, you said, whenever you don't do any form of marketing, and I'm not choosing one on, obviously I'm in direct mail is what you said, and that's my preference and what I recommend, but you're gonna always leave money on the table because people.
Yeah, I was gonna say that. My phrase is, if you're not using direct mail marketing as part of your comprehensive marketing strategy, you're leaving money on the table. Now let me explain what that means. And that's the point he's making. Let's just say you're doing pay-per-click advertising. You're paying Google and you're doing well. You're making money. You're happy. Well, you can't make somebody click, okay? I would never in a million years go to Google to sell my house. I would never even think of doing that. If I'm a guy that's never going to go to Google, but I got a house to sell, if you don't do something other than Google, you will never get that lead for my house. Never. But everybody goes to their mailbox, okay? Because that's universal. We all still go to the mailbox. Even people that are super digital, live on their phone and they do nothing but digital, they still go to their mailbox and they still sort through the mail over their trash can. And they still pay attention to the stuff that gets their attention. So if you don't use direct mail, you're literally leaving money on the table. You're missing out on a significant chunk of the market that you could have. So it really is. And the other thing, and Ty said, it's staying power. When you do any kind of digital marketing, I don't care what it is, there's no staying power. What I mean by staying power is if you see an ad come across your phone, you either notice it or you don't, but you never go back to it 6 months from now, okay? You don't say 6 months now, I saw an ad on Facebook. Where did I find that ad? I'm gonna go find that ad. Nobody does that, okay? Especially the longer down the road. But with mail, you send somebody a mail piece, maybe they're not ready to sell their house, but they think I might be in the future. They might just save that mailer in their pile on their desk. And 2 years later, they find it in the pile and they think, well, hey, I remember that guy. I'm going to call that guy. That's called staying power. Direct mail is the only marketing method where you have staying power. And anybody that's been doing direct mail consistently for years will tell you they get deals all the time from people that save things for years. That just adds to your return on investment, and you can't even really quantify it short term. You can only quantify it long term because you got to give it long term before those things come in.
I looked up a stat. I don't know how accurate it was. I don't know about the source, but baby boomers, I don't know what it may be, 58 to 78, somewhere in there right now, somewhere in there. I wanted to know what percentage of real estate do they own residential. I think it was like 40%, whether it was a house they lived in or additional properties.
And the baby boomers, I'm at the very last year of the baby. I'm 62 years old. Mm-hmm. I'm the very end of the baby boomer generation.
Okay. All right.
So that's people, I think it's like people from 60 to 80 years old is like the baby boomer generation.
Okay. All right.
So yeah, those people, most people in that generation own houses. Most of them got them paid off, and they're getting old. And so those are prime targets.
And they most literally will sit there, like you said, and they don't have anything else to do. A lot of times they're retired and they're going to read every piece of the mail, and plus they come from an era where it was a thing, what I'm saying? That's, you communicated with people through mail. You wrote someone a letter or whatever. So you don't lose that in that sense.
Yeah, you mentioned before we started the call, we're talking about calling and texting. So let's talk about that a little bit, because that is something you got to understand.
Yeah, okay.
That is, if you don't know, cold calling and cold texting is illegal unless you have explicit permission from the person you're going to cold call and cold text. There's these laws called TCPA laws, and there's federal laws and there's state laws, and every state has different laws, but they're all similar. And in a nutshell, the way people do this in real estate is largely illegal, because what they do is they buy a mailing list. We see this a lot in our customers. They'll buy a mailing list and they'll mail to it. They'll also skip trace that list, which means you give it to somebody who can find phone numbers associated with those names on that list. And then they do it themselves, or they hire a cold calling company and a cold texting company to mass cold call and mass cold text. If you're doing it that way, what you're doing is illegal, okay? And there are people in this industry, there's lawyers that are onto this now, and they're filing class action lawsuits all over the place, and they're getting big judgments. We have a customer, and I won't mention his name, but he paid $1 million. He settled for $1 million. He was facing $15 million potentially, because the statute is in most states, it's $1,500 for every single call or text. You're doing thousands or tens or hundreds of thousands of cold calls, cold texts. Take 1,500 times 100,000, a lot of money. Okay. So just be warned. Now, there are ways you can do some things to make it That still doesn't make it legal. But the main thing is if you screen your list against the do not call list, both the national and the state, that will help you. But technically speaking, you're still supposed to get explicit permission. What that means is, we've all done it. If you go to a web page and you order something and there's a little checkbox at the end that says, do you give us permission to text you? If you don't check that checkbox, you didn't give them permission. That's what they got to do to truly make it legal. Well, nobody in real estate's doing that, okay? They're buying lists, they're skip tracing, and they're cold calling. And it's still happening. It's not happening as much as it used to. Since I still own real estate, I get these calls and texts. And I'm not getting as many as I used to, but I'm still getting them. There's people still doing it. It's just not as much. But most of those people have transferred to direct mail because there is no law against sending direct mail. There's a couple of states that have some disclaimer requirements. Georgia's one of them. They require you to put certain disclaimers on your mail. And there are some laws pending right now, and some other states are looking to add some disclaimers. But you can still mail. You just got to put the disclaimers on it. But for the most part, you can send anybody anything in the mail, and it's totally legal. And if you're doing offer mailers, by the way, I'll say one thing about these offer mailers. If you're doing offer mailers, because we've seen some lawsuits just recently, in 3 different cases, I've seen a lawsuit or a threat of a lawsuit where our customers did an offer and they offered, and the person that got it said, I accept your offer. And as is, and the offer is contingent upon inspection. And it said that on the mail piece, but they're trying to claim that they're taking advantage of the person. So what we have changed all our mail pieces to add pretty strong disclaimers that are clear on the mail piece that says, this is an offer only, it's not the actual, it's contingent upon the sale of the inspection of the property. And this is not a real check. And the ones that aren't checks, we say we're offering you up to a certain amount. Because if you say up to, then whatever the amount is, it could be anything up to that. So that frees you from somebody saying, I accept this exact offer, because it's not an exact offer if it's an up to offer. So just be aware that if you're doing direct mail and you're making offers, make sure you have the proper disclaimers to keep you out of trouble.
A couple of things before I forget it. One thing is expectations on response rate. And I know it'll depend on the piece. But what should be someone's expectation?
The national average right now, based on our data, is only our data for our mail, but we've got data on millions of pieces of mail, is 0.9%. That's 0.9%. And that's using all different kinds of lists, because in the mail business, there's some big names for lists. And I'm sure you heard of these. You've heard of List Source. You've heard of PropStream. You've heard of Audantic, DataFlick, 80/20. There's probably 20 other ones. Those are the biggest names we hear most often. And there's our data, which is REI Smart Data. These days, most companies are getting into AI as well, and they have AI algorithms that help to improve the data. But anyway, no matter where the data comes from and what mailers you use, average that all together, because we use data from all those sources. And we try to use our best mailers all the time, and 0.9 is the number we're getting as an average. However, that's an average, okay? There are people that get upwards of 3%, and there are people that get 0.1, 1/10 of 1%. Now, generally speaking, I can tell you the rule of thumb is the larger the market, big cities like Dallas, Houston, Denver, Scottsdale, Los Angeles, big cities generally have lower response rates. If you can get 0.5% in a big city, you're doing pretty good. Okay. The smaller markets, those are the ones that get above 1%, but it is going down. Response rates today are about half what they were 2 years ago. That's because of it's my theory. Well, I think there's more competition for 2 reasons. Number one, there's always more investors coming in the market, but also because texting and cold calling has become much more difficult legally. There's a lot of people moving that money from there over to direct mail. We're seeing it in our own customers. We're seeing people massively increase their mail rates because they're getting out of texting, but they got the money to spend. So they're moving it to direct mail, which means more competition is what it means. And 2, interest rates are still a little high. So real estate still isn't moving like it did years ago because interest rates are higher. And I still think there's some uncertainty. First, it was the election. Going into the election, we saw things slow down. And then after the election, especially with Trump and these tariffs and stuff, there's some unknowns around that whole thing that we theorize, and I don't know this for a fact, is my theory, that it has caused people to hesitate a little bit, which has made things a little tougher for real estate investors. Now, that being said, I will say we are still seeing customers making profits doing mail. Profitability per deal is still up there. It's not unusual for us to see people making 25 grand and more per deal everywhere. Even in St. Louis, which is a pretty conservative area, you can still pretty easily make 25 grand or more per deal, especially if you fix and flip. But even in wholesaling, it's amazing the money that can be made in wholesaling But you go to a place like California, some of these big cities, the response rates are low, but the profitability is massive. I've got one customer, they were happy with 0.3% response rate, but they make that the reason they're happy, that means out of 1,000 mailers, they get 3 leads. That's not much, but they're making 50 grand plus per deal.
Yes, so, you said 0.9, so basically you're saying 1%, but just to break it really down. So 1,000 times 0.9 is 9. It's 9.
That's correct.
So if you send out 10,000, that's 90, right? So just to give you an idea of the response rate.
So you got to know your own, that to that point, to just add on to that, a big factor is how many leads does it take you to close a deal. Everybody's different depending on your experience, the type of lead, the area, there's a million variables there. But I will tell you, nationally speaking, the beginners, people that aren't real experienced, usually take 40 to 60 leads to close a deal. The people that are good at it usually can do it in under 25.
Yeah, if I was more talking about experience, 25 to 30. Yeah, that's the number. But people that want to sell now, just because they called you back doesn't actually mean they want to sell.
I'm talking gross leads. When I say number of leads, I mean gross leads.
Yeah.
So because of the 40 to 60, there's a lot of those that are bogus leads.
Yeah.
Because really, it doesn't take 25 good leads to close a deal.
Yeah.
It probably takes 10, but you might get 25 total phone calls to end up with 10 really good leads, and you can easily close one out of those. And really good people can do better than that.
Yeah. Again, just to be clear with people, so I'm gonna use 1%. That makes it easier for people. Some people, like I say, depending on the market, depending on the mailer, may go up to 3%, which would be 30, right? So out of 1,000. So the bare minimum that someone would probably need to send, I know the more the merrier, but if they're going to be serious about this, what would be a bare minimum of mailers you think they would need to send?
We tell people, no matter what, we use 0.5% when we're coaching people.
Yeah.
We don't use 1. Because I'd rather be pessimistic than optimistic.
I got you.
I don't want somebody to say, you promised me this. No, we don't promise anything. We usually use 0.5% in our calculations. And we tell people, if you're not mailing at least 2,500 pieces of mail, you're wasting your money. That's not really enough. Percent is 25 leads.
Yeah.
We really like to tell people mail at least 5,000. You got to back into it, okay? You got to say, how much do I make on a typical deal? And how much am I willing to spend that money in marketing to get that deal? And that's how you back into it. It depends on you. Everybody's different, but back to that same guy, I use that same example. It cost him $10,000 on average in mail to get a deal, but he makes $50,000 every time he spends 10. So he's still getting a 5-to-1 ratio, 5 times his money on ROI. He's totally happy with that. And he's happy if it even costs him 20 grand to get a deal. Usually doesn't, but he's still happy with it. So that math works. If you're only making 10 grand profit on a deal, then you're going to have a hard time making it work no matter where you are in mail. You got to find places where there's enough profit. Either be more selective on your deals or just find better places. It comes down to, if you can't pay to do marketing, you got to do legwork. Legwork is free, but your time is worth money, so it's really not free.
Yeah, exactly. If you have the resources, then, that, ain't no question.
It can work. I can tell you, on these millions of pieces of mail, we rarely have people leave because they say, I can't make money. They leave for a lot of reasons, not because they're unhappy with us, but because they just can't make it work or they're not busy. But the math still works for mail. That's the main point I'm trying to make. In most places in America, you can make mail profitable in real estate, especially if you're fix and flip.
I want you to reiterate now, just say, I'm not just going to send, if you can afford to pay for 5,000 pieces or more. I tell people, if you can't commit to it for probably 3 months, you may be wasting your time.
100%. It's not just one time. That's a good point. All marketing. This is not just direct mail. All marketing.
All marketing. Yeah.
You've got to commit.
Really 6 months.
Yes. You've got to commit a certain budget and just do it. And people, one problem with real estate, and the reason there's so many investors, there's a lot of people that fail. And the reason they fail is they don't treat it like a business. If you buy a franchise, I don't care what kind of franchise, but I'll use even Home Investors. Home Investors is a real estate house flipping franchise you can buy. And they've been around for a long time. You can't even get into that. You have to commit to $15,000 a month marketing, or they won't even take your money as a franchise. And the franchise itself costs, I don't know what it costs exactly, but it's at least 50 grand just to get into the deal. And you've got to pay them a percentage. You not only got to pay for the marketing, you got to pay them a cut of the deal. Of every single deal you make, it's called a royalty. So it's a lot of money. Any franchise in America, I don't care what you buy, you got to usually get a bank loan to buy into the franchise and commit to a serious investment to even get into it. Well, people can get into real estate for nothing, okay? You don't have to buy a franchise. You can literally start tomorrow and say, I'm going to start selling real estate. The problem is if you don't treat it like a business and invest in it in the beginning, which is marketing is the most important thing, then you're not going to get anywhere. Unless you're going to do it, what most people do if they have no money, and you hear these stories all the time, they do their first few deals with sweat equity. They go out, whether it's Drive for Dollars, they know a real estate agent, who knows how they do it, but they somehow get a deal or two without paying money for marketing. But the ones that are successful then reinvest that profit they made into starting paying for some marketing to then ramp it up to a business. Because it's not a real business if you don't have regular lead flow every single month. I think the only way you get regular lead flow is to pay for regular marketing. And that's what we do in our own business. I spend $25,000 a month. Now, granted, I'm a big business with 100 people, but even when I was much smaller, we had a regular marketing budget every single month, no matter what. We just said we're going to spend this much money. And some months it worked really well. Some months it was terrible. That's marketing. There's always ebbs and flows, and the people that succeed are the people that keep in the game every single month. Because even when you have bad months, you never know. We say on average it might take 25 leads to get a deal, but that doesn't mean the next phone call can't be a deal. I've had people get one phone call and make one deal.
When I started, the first two phone calls I got were deals. One of them blew up in my face. I had to get a lady her money back. She actually put the money in my hand. It was a lease option opportunity. And the second one was a wholesale. That's not normal.
And that can't happen if you're not in the game.
Yeah.
If you want to get into this business, treat it like a business, figure out a way, get some money, and spend that money on marketing on a regular basis. And people say, well, I'll try it and see what happens. That's your attitude. Don't even do it. Okay. You say, I'm going to go into the real estate business and I'm going to be successful no matter what. I'm going to make this a success. It's not rocket science. It's not hard. You just got to put in the work.
Yeah. Well, Jeff, I know I took up an hour, man. It's been great. Like you just go with it, man.
By the way, if you call us, Ty has an affiliate link, but if you call in, because sometimes people just call in or you look us up on the internet or whatever, make sure we offer a free 15-minute coaching call to anybody who's interested in thinking about doing business with us. We're not high pressure. We're not going to hard close you. There's none of that. We're looking for long-term relationships. We understand we have to win together. We have to help you be successful or you're not going to come back. We get that. So we want you to understand the game and we'll help you with that. So we do a free 15-minute coaching call just to answer any questions. We'll take as long as you want. And then if it makes sense, we'll do some business. If not, that's okay too. But anyway, if you're doing that, just tell us Ty sent you so we can make sure he gets credit. Okay. Because if you don't go through the affiliate link, we're not going to know unless you tell us that.
Well, man, wow. Full of just great information, guys. We've gotten it from someone that deals with a lot of different investors on a lot of different levels. I really am glad Ryan reached out to me so we could put this together. From there, we'll definitely try to push forward, probably do a little bit more of this, maybe Ryan the next time or whatever. Guys, if you're not doing direct mail, you're leaving money on the table, especially if you're already doing well. You're leaving money on the table. And
I'll tell you what, one more plug for the call thing. It's cost a little more money, but if you're not using our call team, you're leaving money on the table.
Oh, I'm glad you brought that back up. Yeah. Have you all considered AI intake as far as your call, the inbound calls?
Yes, we have not done anything with it yet, but that is on my to-do list. We are going to experiment with that to answer the phone at the times we're closed. I can see a day where it'd be 100% AI.
Yeah.
Our operators, they only answer for real estate investors. They've been doing it for at least 5 years each. So they can have an intelligent conversation and they know real estate.
Yeah.
So I believe in human relationships and I'm not ready to have a computer take over my human relationships. So we're going to play with it for sure to try to enhance things.
For training purposes, you all have a bunch of calls recorded or whatever. It would be very easy to train the AI with that or whatever.
Oh yeah, we got it all. So we're talking about it right now.
Oh yeah. All right. So I appreciate it, Jeff, man, again. And guys, you see what to do below. Thanks again, Jeff. And we will see you guys on the flip side.
All right. Have a great day. Thanks. Bye-bye.